Ladies and gentlemen, good day and welcome to Aditya Birla Sun Life AMC Limited Q1 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Meghna Luthra from InCred Equities. Thank you, and over to you, ma'am.
Thank you, Hamshad. Good evening, everyone. On behalf of InCred Equities, I welcome all to Aditya Birla Sun Life AMC's first quarter FY26 earnings conference call. We have along with us Mr. A. Balasubramanian, MD and CEO, Mr. Pradeep Sharma, CFO, and Mr. Prakash Bhogle, Head of Investor Relations. We are thankful to the management for allowing us this opportunity. I would now like to hand it over to Mr. Bala sir for his opening remarks. Over to you, sir.
Yeah. Thanks, Meghna. Thank you for the introduction. And good evening, everyone, and thank you for joining today's investor call. I hope you have had the opportunity to review our earnings presentation, which is available on both the stock exchange as well as on our website. Let me quickly begin with the outlook on economy and an update on the mutual fund industry. The global economy is undergoing major changes in policy frameworks, which could have significant implications for global growth, trade, and capital movement. Rising trade tensions and heightened policy uncertainty is expected to weigh on global economic growth and performance. However, the situation is still developing, and despite notable policy disruptions, particularly around tariffs, global growth has experienced only a mild impact so far. As far as India is concerned, the macroeconomic outlook remains strong. The economy expanded by about 6.5% FY25, aligning with its long-term growth trajectory. And the Reserve Bank of India has maintained in FY26 a growth forecast of 6.5%. And this is a commendable achievement given the global volatility. And current economic indicators suggest a steady momentum, and favorable monsoon conditions are also expected to support agriculture production, rural consumption, and also keep the inflation in check. Now, according to both the IMF and World Bank, India is projected to be the fastest growing major economy in 2025, and key drivers of growth include increased government spending, robust construction activities, and revival of rural demand. In addition to strong growth, India's macroeconomic fundamentals are stable. LA inflation has dropped significantly, averaging 2.7% in Q1 FY26, and is expected to remain below 3.5% for the full fiscal year, under RBI 4% target. The country's fiscal position is sound, with the government on track to meet its FY26 fiscal goals. India's external sector is also stable, with the large current account reading showing a surplus and foreign exchange reserves nearing a record $100 billion, and the Indian rupee remaining one of the most stable currencies globally, thereby enhancing India's appeal to international investors. With inflation under control, the RBI has shifted its focus towards supporting growth and has adopted a more accommodative monetary stance. And given the favorable inflation outlook and current yields levels offer attractive real returns, and easing of monetary policy is expected to positively influence the market performance as we move forward. Despite some global trade uncertainties, we remain optimistic about Indian markets, given the stable domestic growth outlook, healthy corporate profitability, and strong macroeconomic fundamentals and supportive pro-growth policies. Moving to the Indian mutual fund industry, the quarterly average AUM of the industry as on June 30, 2025 stood at 72.13 lakh crore compared to 58.96 lakh crore as of June 30, 2024, which is a growth of about 22% on a year-on-year basis. During the quarter ended 30 June 2025, the industry witnessed strong net equity sales of around 1,30,000 crores. The total NFO collection during this quarter were about 6,500 crores, primarily coming from equity funds, mainly driven by sectors, thematic funds, and multi-cap funds, multi-asset funds, which are launched by some of the key competitors in the industry. The industry SIP contribution for the June 2025 stood at 27,269 crores, growing by 5% on a quarter-on-quarter basis. The total number of mutual fund folios stood at 28.5 crores as of June 2025. The individual average AUM for June 2025 grew by about 21% year-on-year from 37.47 lakh crore to 48.38 lakh crores, contribute around 61% of the total industry AUM size. And B30 cities with an average AUM of 13.8 lakh crore for June 2025 accounted for about 18% of the total industry AUM. Coming to Aditya Birla Sun Life AMC performance, we have witnessed a healthy business momentum in Q1FY26. In fact, the net sales for the Q1FY26 delivered strong growth, exceeding the net sales of the entire FY25 of last year, reflecting a strong overall positive business momentum driven by improved fund performance across all categories and various ongoing initiatives that we have been engaging with the market. We also maintain our overall market share over the last 2 quarters. In fact, this is in line with what we have been highlighting for the last 2-3 quarters, the steps that we are taking from building the business next level and how it's paying out. I'm also pleased to share that during the quarter, we achieved a significant milestone of crossing 4 lakh crore in mutual fund AUM, demonstrating our unwavering commitment to the growth that I laid out as a path. Our overall average AUM, including alternate assets, stood at 4,43,000 crores, growing by 21% year-on-year basis. Our mutual fund quarterly average AUM reached 4,03,000 crores, growing by 14% year-on-year. The quarterly equity average AUM stood at 1.8 lakh crore, growing by 11% on year-on-year. Our SIP contribution June 2025 stood at 1140 crores with 38.46 lakh crore account, 38 lakh account. Our SIP AUM contributes around 45% of our total AUM, reference cyclical assets. In fact, I must also mention the SIPs. We have moved to the contribution model. That's something is which I just want to highlight that. The total number of investors folio for June 2025 stood at 1 crore 6 lakhs, witnessing 14% year-on-year growth. On the equity investment front, we are seeing consistent improvement in the investment performance, strong returns delivered across all multiple schemes, reflecting enhanced performance driven by the process that we have implemented across the equity schemes and fixed income schemes. On the fixed income side, the performance remains robust across all categories. We are also expanding our product offering with innovative launches to better serve the diverse needs of our growing investor base, with 1 or 2 funds being planned in the overall pipeline of products. After hosting an exclusive event called Vantage Point and last quarter of last year, which brought together the top MFDs across the country, we are now also hosting regional growth summit for deeper engagement and mindshare with our distribution partners, empowering them to amplify our market reach and strengthen our positioning for sustained growth ahead. In fact, we have covered all the key markets which contribute about 80% of the AUM the last 3 months by way of the engagement that we have rolled out. On the alternate business front, we are also continuously enhancing our PMS and AIF offering across both equity and fixed income to better serve the evolving needs of HNIs and family offices. During our growth summit, that event that we have been doing, the interest evinced towards our AIF product offering have been very encouraging, thus improving the scope for scaling up this business through MFD's contribution also in this business growth opportunity. Following the receipt of the ESIC mandate, which we won last year, we commenced managing the debt portfolio, and its AUM stood now about 20,260 crores for the quarter ended June 30, 2025. And consequently, our PMS AIF assets witnessed impressive 8 times growth, including ESIC mandate, rising from 3,368 crores to about 20,647 crores. As we present, we have completed the first close of ABSL Structured Opportunities Credit Fund Series 2 with the Fixed Income Credit Fund, and also preparing to launch ABSL India Equity Innovation Fund, positioning us to build a robust and comprehensive product portfolio that effectively addresses the evolving investment needs of our clientele while accelerating growth momentum across our PMS and AIF business. Our offshore assets stood about 10,588 crores for Q1FY26. Under the GIFT City platform, we have a fundraising underway for the India ESG Engagement Fund, ABSL FlexiCap Fund for Inward Remittance, and ABSL Blue Chip Fund for the Outward Remittance. While on the one side we continue to build this piece through our receipts and GIFT City platform, we also witnessed a few withdrawals from a few large customers in view of the portfolio restructuring, which they have undertaken taking into account the emerging global political uncertainty as well as other challenges on the basis of their own portfolio allocations. We have seen some reductions and withdrawals on the overseas portfolio. However, this does not have much impact on the overall AUM as well as on the overall contribution to the profitability. On the passive front, our focus remains on building our AUM by launching innovative products in ETF, index funds, and fund of funds, while driving customer acquisition through our digital platform and distributors. As of June 2025, our total passive assets reached approximately 36,400 crores, growing 22% year-on-year, with our customer base reaching 12.3 lakh full users. Our current product suite comprises 22 distinct offerings designed to meet varied investment needs, so that various fund of funds that can be launched in the future can use any of the products that is available as part of our bouquet in the passive platform. Moving on to the financials, Q1FY26 revenue from operation stood at 447 crores, up 16% year-on-year. Q1FY26 operating profit is at 254 crores, up 21% year-on-year. And Q1FY26 profit before tax is at 372 crores, up 22% year-on-year. And profit after tax for Q1FY26 is at 277 crores, up 18% year-on-year. With this, I would like to conclude and open the floor for any questions. I will be joined by Pradeep Sharma, as the CFO, as well as Prakash, who is our IR head. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yash from Citigroup. Please go ahead.
Hi, sir. Thanks for taking the question. So just few data-giving questions from my side. One is if you could share the operational revenue from the non-mutual fund business and also the ESOP expense for the quarter, please.
So Yash,
Prakash is answering.
So Yash, the other than MF means non-operational income from the alternate asset is around 32 crores for this quarter, and the ESOP is around 1.6 crores.
Sorry, 1.6
crores.
1.6 crores. Okay. And so the SIP AUM share, if you could please repeat. I know you mentioned it in the opening remark, but I think I missed it.
Sure.
SIP AUM it's around 84,000.
Okay, so the share. Okay. And so lastly, just on the market share, if you could share the divergence between the flow and the stock market share for net equity and equity-oriented flows, please.
Yeah. On the overall market share, we remain more or less flat compared to the last quarter. I think, as you all know, whole of last year, quarter on quarter, was the fall was continuing. At the same time, the fall was getting narrowed as we progressed in various steps that we have taken. And in this quarter, more or less, the market share remains somewhat flat. Backed by the focus equity funds that you have identified, where we need to get our full market share. That's something is working. And as a result of that, the first quarter net sales, we don't disclose the number per se. But otherwise, when I look at the number, first quarter net sales numbers is equivalent to the last year net sales numbers, which is an encouraging trend that we are seeing, and hopefully we are able to maintain this on the basis of strategy explained.
Okay. Thank you, sir. That's largely from my side.
Thank you. Before we take the next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of Lalit Deo from Equirus Securities. Please go ahead.
Yeah, hi, sir. Good evening. So just firstly on this, on the yield side, could you give us a segment-wise yields across equity, debt, liquid, and passive side? Second question was on the employee expenses. So, like this quarter, we have seen some sequential decline. So, could you allude us the reasons why there has been a decline in the employees' expenses, and how should one look at it for the whole year? And lastly, just a clarification, when we say that the overall net sales in this quarter have been higher than the full year has been higher than FY25, so this is only for equity segment, or this is like all this includes these segments?
The last question, of course, is only equity what I mentioned, and others two questions in terms of yield, class Prakash to answer.
So Lalit, the yield on the equity is around 67-68 basis points. It is in the range of around 24-25, and equity it is in the range of around 13-14 basis.
And employees.
And the employee cost is mainly on account of the variable pay. It was little bit on a higher side in the last quarter.
Provision. Yeah.
So how should one we look at it like for the whole year?
Lalit, actually, so this on yearly basis, we see this variable pay basis the business performance and all. So what numbers normally, if you see the Q4 number, you will have to analyze it for the full year. So that will be the normal state.
But I think the broad basis, just to add to what Pradeep has mentioned, the employee cost, that is that what we have earlier guided. One, building our team as far as these HNI team concerns. Now we already have about 95 team members. And anyway, right now we have taken a call, we'll go up to 100 team members. We'll restrict to that and see the outcome of this broader business outcome point of view. Second, the alternate side, we have been having in mind that to have somebody to build as a business in addition to the existing team of people who could be the driver of this business for the larger growth. That's something we have been thinking. Of course, this headcount would come partially, a little bit in our role, a little bit come in the, mostly will come in the Sun Life role. That is we are planning. So the headcount will increase, but may not actually a significant increase in the cost as a result of that. And then as and when we GIFT City this year, once we convert that into a subsidiary company, for which we would take some steps in the current financial year. That may warrant some bit of marginal capital investment, which is not very significant. But however, we have to of course have the right sort of people, at least to carry out the compliance-related work, as well as if we have to hire somebody to build the business, that point of view will take. Anyway, it will take about 6 months for us to crystallize it. Yeah.
Thank you. Participants who wish to ask a question may press star and 1 at this time. The next question is from the line of Tanmay Chaudhary from Mentio Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, my first question is on the equity AUM side. Like we have seen 7% sequential growth. So I just want to know, like, was majorly driven by M2M, or we have seen good traction in the net sales also? Because and you also can you also comment on the market share over the net sales?
Yeah, which of course I explained earlier, Tamay, on this. One of the net sales largely, which I mentioned about, it's net sales with adding to the overall AUM. Market share remains somewhat flat. That's actually largely on account of one of course net sales is improving on certain segment. There are certain schemes which of course not being favorable from the overall investors' point of view. But therefore the market share remains somewhat flat. But overall number, if you have to look at it, given the large size, of course the industry itself so large, we still have to go further in terms of showing that in the reflection of the overall market share. But otherwise the path is towards that.
Okay.
Yeah.
Got it, sir. Yeah. Sir, one more question on the liquid flow side, like income oriented schemes. Like as I can see, like around more than 60% of flows or AUM comes from the corporate in T30 cities, right? So how do you see that corporate flows ongoing, and are we penetrating more corporates and yeah?
Sure. So the way we always approach the institutional business, as the one institutional business predominantly is a direct to customer business, and we currently handle roughly about 9,000 corporates across the country, covering the large 8 cities. Given the fact that we have an established track record in fixed income space, and also given the fact that our engagement at the ground level is extremely good when it comes to the question of treasury solutions by the institutional team of about 55 people, and that team now is taking additional responsibility to expand the market in the next 12 locations, taking the coverage about T20 locations. That's one we already planned. And we also planned where the team, each of the companies, about 9,000 companies, we target to take it about 12,000 companies. And each companies have also got the family offices and promoters driven investment opportunities. They also hold additional responsibility to actually reach out to the family offices using that relation that they built in order to sell some of the other product segmentations, including alternate solutions. That's the approach we have taken. That's the way we have also aligned the KRA with each of the teams to take full advantage of the presence that we have in the segment. And this opportunity which will be provided to the investors will not only be in the fixed income solutions. We also seen flows coming in our index fund that we launched last year, which is like hold to maturity kind of things, where we have seen new attractions. We also launched equal taxation debt-oriented funds with a 2 years after 2 year period. We have aligned one of our funds in order to serve the needs of the customers. Of course, we are also educating these customers in the current low interest rate regime, which are the least, minimal risk that they can take. However, they can get relatively tax advantage kind of return over a period of time, such as balance advantage fund. Also, we are actually positioning them for them to consider as investing. And last but not the least is from a family office's point of view, we are targeting AIF and asset class could be right asset class within the fixed income space with interest rate being very low. But as we go down the credit line, credit rating, the yields are better, and there are people who actually seek those investment opportunities. That's also something we are doing. In the AIF sector, we have seen recently a closure of fixed income opportunity AIF fund is largely coming from the participants coming from these kind of family offices.
Okay, fair enough, sir. So just one last question. In the last PPT, the SIP contribution number is a bit different from the latest PPT. So is that restated or can you just correct me over that?
Sure. I'll just ask Prakash to highlight on this.
So yes, earlier we used to report SIP book in our presentation. That methodology we have changed to SIP contribution from this quarter onwards, which is in line with what MP has also started disclosing on their website, and which other players has also started reporting in the presentation. So that is the only difference. Otherwise, from the flow side or on the AUM side contribution, it remains the same.
Yeah.
Okay. Thank you. Yeah.
Thanks.
Thank you. Before we take the next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of Abhijit from Kotak Securities. Please go ahead.
Hi, good afternoon, everyone. So the first question is on yields. If I recall correctly, I think equity yields are now down, 1 basis point sequentially, despite about 7-8% equity AUM growth. So just wanted to double check if there's been any tweaks with respect to commissions, or this is just the normal slab movement.
Yeah, Abhijit, I'll ask Prakash to answer.
No, Abhijit, this is largely on account of increase in the AUM only. If you see, our AUM has increased to around 1,80,000 crores from last quarter, which is 1,69,000 crores. So there is no tweak on the brokerage structures. It is mainly because of the increase in the AUM.
Okay, got it.
Yeah, that's why if you look at the bottom line, the yields more or less remain the same, especially in the operating profit level if you stay. The yields are little better than last quarter as well.
Yes, sir. Secondly, in terms of net flows, I think, again, going back to last quarter, I think we had highlighted that we've seen some traction in 2-3 funds like, Frontline, Balanced, Multi-Cap, maybe a couple of other thematic funds as well. Anything specific that you want to highlight with respect to the flow movement that we are seeing over the last few months as well?
Sure. See, the way we said that the entire team, right from investment to the sales team, and also with the distribution partners, given the fact that we have large funds in our bouquet, but we have to identify 7-8 product in consultation with the investment team and position that as a product where we need to get flows in terms of with respect to the competition. So that's why we have large cap fund, flexi cap fund, and multi-asset allocation fund, and balance advantage fund, and Gen X fund. These are the 5 focus products that we kept. In addition to that, we also kept 2 other products on the thematic side, which is the conglomerate fund, and some of the long-term solution products that we have, which is the Bal Bhavishya fund, retirement fund. So this way we have positioned the product and the entire sales team is also encouraged and in order to have their engagement. From fund management point of view, in order to get higher mind recall, uniform push is also being given from the fund management side also, right from Arish to Arish, the entire team talks only on these 5-6 products so that we are able to get a higher market share. This is what we are seeing in terms of tractions, whether it is the flows, whether it is SIPs. That's why we are seeing actually increased flows. It will take some time for it to see a significant change in numbers, but at least the trend is positive. In addition to that, despite doing well, arbitrage fund is one category where the industry was also growing their size. Our growth was relatively less, but we also taken some good steps internally as to how do we manage these funds very effectively, efficiently, so that we can meet the expectation of investors as well as the large allocator of money into the segment. Also have been addressed. So therefore, the holistic growth and those segment of the market where the flow is coming. At the same time, we can get our rightful mind share or market share rather. There's one segment where right now we are not positioned enough, which is the mid and small cap segment. We thought let us focus on reviving the performance on these funds with respect to the competition, and then when the time comes right, we will start pushing these funds.
All right, sir. Super helpful. Just one last question on the industry side, sir. This recent consultation paper with regards to scheme classifications and a couple of other additional points regarding one additional scheme apart from the current one. Any broad thoughts that you can share from an industry perspective?
Sure. So this was of course it has come as a draft paper at this point of time. In fact, this is also discussed in the committee, one of the CIO committees, then the operation committee, some of the draft proposal with respect to the one aligning of the schemes. Majority in the industry has accepted it. If I have fund and equity, which is a 25 years track record that we have, just creating a brand as fund and equity as the name. Now that has become a history. Now we've made a large cap. So the uniformity has come across the industry. We used to call it blue chip. Now it's no more blue chip. It's a large cap. That's something we all have got aligned and fully done with that. The second is the fund size become larger. Then whether we can launch one more fund. The discussion was there at the AMC level as well. In fact, AMC themselves wrote back to SEBI that then it will completely take away the purpose of classification, and it can probably create more confusion among the people than how the portfolio will be constructed, how the expense will be charged, and then it go back to the old system of multiple schemes coming from the same category. This confusion will come. Therefore, there is no not even, majority of the people were agreeing with that. But however, SEBI felt let us put to the public opinion and by way of draft, therefore it has come. My own assumption is, given ultimately why the classification has come, not in one in the interest of first the customers to have better clarity in terms of what product he buys, and single product from each fund houses. I can say that we are one of the old fund houses. We used to have 2 liquid funds in the past, and because it was size and various things that we used to do, and today I cannot have 2 liquid funds, and it was a conscious decision which was taken by SEBI. Therefore, why that should get reversed now will always remain a question mark. But having said this, I think SEBI is also looking at various thematic funds that is being launched. You do have an opinion that how many thematic funds we can create, unless until you are able to create at least about 60% differentiation between the existing funds, the thematic funds. This also over a period of time would get curtailed. So therefore, this needs to be seen as to how market in general people react. But at this point of time, members of the industry, majority of them, I would say 99% of them or 95% of them, were especially on the same category, were not fully for it. But still, now the draft report has come, all of us will respond to that.
Got it, sir. This is super helpful. Thank you so much.
Thank you. Participants who wish to ask a question, press star and 1 at this time. The next question is from the line of Meghna Luthra from InCred Equities. Please go ahead.
Yeah, hi, thank you.
a couple of questions. One, what is the yield on the S6 mandate? And two, have we taken any cuts from the distribution commission in recent quarters, or do we plan to take some like our peers have done? And what is the pipeline on the specialized investment fund look like? That's it.
First question is
So,
which one? Yes.
yes,
Yes. Okay. Sorry. You think you said okay. Yes, is the mandate. Anyway, the government mandate. It only gives the headline number, no doubt, but doesn't give us the much profit. But we'll barely. We'll of course will have some cost will incur, which I call it as the investment that we have to make to serve government of India. We are happy to do that. With respect to the SIF, we do have a plan. We already taken approval from our board to have a separate brand, which I can of course share, which is called Apex. Internally, we already named, and we'll come with a press release on this very soon. At the same time, we have already identified a product opportunity that we can create in this SIF space, covering fixed income, covering credit, covering arbitrage plus equity, as well as long short. So while we have internal capability to manage most of the product innovations, we don't have internal capability to manage a large, long short kind of fund, absolute return kind of fund. We are in the process of finalizing, looking for people, in the process of finalizing very soon. That I think it should come on board. And the second question was on the
Distributors commission.
On the distributors commissions. In fact, we now taken that call, given the fact that one, as a fund house, we have the longer term vision of building scale further, which essentially means as long as I'm able to maintain the current margin and the growth aspiration, then we must also have a balanced approach with respect to the revenue that we can get, as well as the distributions commission that we can pay to build our size. Therefore, we are not taking the call. While we do have a room, I cannot say we don't have a room, but at the same time, we do not take that call at this point of time, given the need of the business to grow the business to the next level of growth and build scale.
Okay, thank you, sir.
Yeah.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah. Thank you, and thank you everyone for joining. And with this, we conclude our Q1FY26 earnings calls. And thanks for all your support.
Thank you. On behalf of Aditya Birla Sun Life AMC Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.